If you've got a 10-year horizon on Tesla, the chances of you not making money over the course of the next 10 years are zero. In 10 years, Tesla is definitely not going to be trading at $300 per share, unless there's going to be a split.
Wow, that's one of the most bullish things you can really say about Tesla, I think. And one of the biggest reasons why I only own Tesla stock is because I think the chance of losing money is so low, but I wouldn't say it's zero, because I can easily think of a scenario where there's a war between the two biggest economies in the world, and then one of these countries chooses to bomb every single factory that Tesla owns in the world. I think it's extremely unlikely, but I wouldn't give it a 0% chance. I like math, I like numbers, I like probabilities, and therefore I don't speak in absolutes usually. Overall, I think Tom makes a pretty good point. It's just that I would not be as bullish as Sim about this particular point. But my long-term Tesla stock price targets are above Tom's. And here was Herbert's response to what Tom said earlier about it being basically a 0% chance of Tesla being lower in terms of its stock price compared to where it is right now.
You really are being very, very conservative. Even your conservative is very, it's hard, like, it's actually really, really conservative. Your realistic model right in the middle, and then you're really trying to tamp down on your optimism on the optimistic model. And that's why I like this a lot. This kind of gives me the sense that this is kind of the floor, and that yet you're very bullish when you say something like, this is a certainty that these things will happen. And then I think the way you're able to say that is because when you really look at it from the negative perspective of everything can go wrong, it still does pretty well.
That's what I love about Tesla so much. Even if so many things go wrong, for example, Tesla somehow could completely mess up full self-driving and never get robotaxis. Somehow, let's say, competition could come in and Tesla's margins would erode further, and Tesla, let's say, doesn't get to 20 million vehicles per year sold ever. Even in these relatively bad case scenarios, Tesla, I believe, is still going to be trading above where it is right now 10 years from now. Significantly above where it is today, actually. And that is if most things go really wrong.
Pre-split, I said, oh, it's a less chance to get it at 800 pre-split. And people were like, oh, Tom, you're a moron. Like when they dropped to 100.
So that would have been about a year ago, and that would be basically about roughly where Tesla stock is trading right now.
And like, it's the same thing. Like people are very short-sighted. And then they drop to 100 and people are like, oh, Tom, you're an idiot. I said, no, my guy, you're missing the point. This is your opportunity to go from being a cynic who's sitting on the sideline complaining to actually, this is God giving you a second chance, and you're missing it by taking shots at me. Just buy the stock. I can't, you know what I mean? It's like, and like, dude, this is like God giving you another chance when they drop to 100. And then they change the tune, and then they say, well, oh, it's finally collapsing. I'll get it at 70. Oh, good luck.
Right. Is that funny? Yeah, people were saying that too. It's 100. Oh, wait till it's 70.
The funny thing is, some of them were actually right initially. Chicken Genius, for example, said that Tesla stock would drop to 140, and he said that while Tesla stock was still above $300. I mostly even agreed with Chicken Genius. I made this whole video back in November. About a year ago, I said most likely actually it will drop further, basically sell Tesla stock now or years later. Split adjusted, that was when Tesla stock was at $300. But instead of making another prediction that Tesla stock is likely to go down a lot more, I just kept buying. Chicken Genius made a video that perhaps Tesla will actually go all the way down to $60 per share. But I just kept buying more and more because Tesla stock was already undervalued at $300 per share, and then it got all the way down to $109 per share, becoming even more undervalued. If you'd like to see what I will do next time when Tesla stock eventually will dip again, make sure to like and subscribe. The question really is not, will Tesla stock dip again? The question is, from where? Will it be from here, or will it be from $500, or will it be from $1,000 per share? By the way, I'm not criticizing Chicken Genius. He's already retired. He's trying to protect his portfolio. I am not retired. I will never retire. I will keep working until the day I die. And I want to put my money, all of it, to work. And I'm not sure when the next opportunity will appear where I can look at it and say, you know what? In the next 10 years, there is a very good chance that it will 10x and a lot more. But the downside of me losing money is under 1%? When another opportunity like that will come? I don't know. Maybe never? Decades from now? If I wasn't investing in Tesla stock, I would just be buying S&P 500, and you're happy if you get 10% a year from that. You are basically happy if your money slightly more than doubles every 10 years. And while there has never been a period in S&P 500 history where if you held it for 20 years you lost money, just recently there has been an instance where if you held it for about 10 years you actually ended up with less money. So why would I take that risk and limit my upside? I just buy Tesla stock. I am not saying you should do that. Maybe your circumstances are very different, and maybe for you, a lot of volatility is not great. Maybe you will need money for some sort of a health emergency, for example, and if Tesla stock is down again, like it was earlier, 70%, maybe that's not a great idea. So you need to think about what is right for you. For me, this is right. But for me, I have relatively high income and I have real estate and multiple businesses that are making money.
There's one thing that Tesla taught the investing world. Until Tesla came into this world, Herbert, the assumption was that 80% of the money in the market is institutional money. 20% is retail money. And retail money is stupid. Retail money has no idea. They don't have the research. They don't have, they're flaky. They're traders. They're easily scared, etc., 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 etc. And people were saying, well, Tesla only has like 30% institutional and it's 70% retail. So it's eventually going to fall over, kill over. And every time it dips, retail buys the dip. It dips, retail buys the dip. It dips to 100, retail buys the dip. The retail in Tesla proved for the first time in history that it does better research, it does better analytics, and it is 100% more stable than institutional when it comes to a stock like Tesla.
For a while, it was believed that having so many retail investors and so few institutional investors is not really a good thing for the stock price, but Tesla has proved everyone who thought that completely wrong. Tesla is still only at 42% in terms of institutional ownership, so it's not a high number, which is actually bullish for the stock because once institutional investors begin seriously buying Tesla stock, the price of Tesla stock will go up. For example, Apple is close to 60%, so there's still a lot more room for institutional investors to buy a lot more Tesla stock.
Why do I think Tesla isn't priced like Nvidia? Look, Nvidia is priced at 240 price to earnings, 45 price to sales. I mean, that's incredible valuations. And if you look at Tesla, they're priced at a completely different level because people have a hard time identifying Tesla as an AI play because they build cars. Then it's really hard for the retail investor and more so for the institutional investor to accept the fact that this company is indeed an AI play because they've never seen a car company that's also like an AI play. That's why you can get Tesla at 69 price to earnings and 9 price to sales. So it's a misunderstanding. It has to do with historically institutional investors misunderstanding Tesla. It started with stuff that are kind of normal. Like Gary and I spoke about it. Institutional investors, they want to see share buybacks, which is a waste of money. If you're Elon, like why? I'll use that capital better, right? They want to see a succession plan, which none of us want to see as Tesla bulls. We want to see Elon there. I mean, it will accept the key man risk. So institutional investors, they have a hard time with key man risk. They have a hard time with lack of share buybacks, et cetera, et cetera. And they don't like that, 60, 70% retail. I mean, they think retail is stupid. So we've proven to them that they're stupid and they've lost a lot of money and a lot of opportunities, and we've made a lot of money in Tesla, but still, they have this superiority complex where they feel like, they're looking down on retail. Whatever, I don't mind.
Eventually, once Tesla reaps its rewards from all the moves that Tesla is making to invest into AI and full self-driving and Dojo, once eventually that becomes so apparent and shows up in Tesla's profits, institutional investors will have no choice but to price that in. You will no longer be able to say, oh, full self-driving is never going to happen for Tesla because full self-driving will actually be making money by then. And that's one reason why Tesla goes through these big bursts and then nothing for a long time. And perhaps, possibly right now, we are in one of these periods. Here, do you remember Jim Cramer saying, don't even rent Tesla stock or something along these lines? And then somehow people realized that Tesla actually makes EVs that work, you can drive them like a car, an actual car, bam, the stock goes up. More reasons, of course. But then later, oh, Tesla can never make a successful mass market vehicle. They should just stick to Model S and X. And the Model Y that they are working on, that's just a bigger Model 3. It will completely cannibalize the Model 3. No one is going to want it. Well, turns out people did want a bigger Model 3, and the Model 3 sales still remain pretty strong, and Model Y took off, just like the stock of the company. This next time is not going to be any different. No one is going to believe that Tesla will be able to actually make money from full self-driving until Tesla actually starts making money from full self-driving, selling these packages to consumers and deploying a robotaxi fleet, which I personally really like, because that means I will have, hopefully, a relatively long time to accumulate a lot more Tesla stock shares at cheap prices.
I think institutional investors are starting to come around with Tesla, because every time Elon executes and he delivers an outstanding quarter like they did last time, they're starting to realize this is for real. And I think for me, it's kind of the longer it takes them to understand that, the better. Because I'd love to pick up more Tesla, and the longer this takes them, I have no
You're
issues
fine
with
with
that
it.
at all.
Okay.
Yeah, no problem.
There's definitely people that invested in 2022, and I feel for them as well.
I know not all of you have an investment horizon of 10 or more years because perhaps you are already retired, but I have more than 10 years, and because of that, I do agree with Tom. The longer it takes for these institutional investors to figure Tesla out, the better for me, because I just keep buying Tesla stock at cheaper prices. Once they start buying Tesla stock, it will be a much more expensive stock. If you haven't seen Tom go through his price target of over $1,000, do it here right now. Unless you haven't finished watching this Elon Musk interview, in which case, watch this one first. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.